leads us to our next panel, sharing perspectives of Chinese investors on concerns, risks, and opportunities are Mr. Elong Huang, founder of Mainnet Capital, and Web3 investors, Mr. Didier Zheng. They will be led by Ms. Amanda Chen, head of RHTLaw's International China Practice. Over to you, Amanda. What an insightful panel that was.
Hello, everyone. My name is Amanda. I'm a partner of RHTLaw Asia and heading our International China Practice. I hope you all enjoy our previous exciting panel, which is on NFT and gaming. And now I'm honored to moderate this panel discussion on the evolving investment climate in Asia to discuss Chinese investors' concerns, risks, and opportunities in the recent years and in the near future. And very pleased to introduce our two speakers today. First one, Elong Huang. I have to say that I knew Elong in 2017, and he is one of some friends who pushed me to pick up crypto and blockchain knowledge and enter this area, very exciting area. Before that, I didn't know about it at all. So Elong, over to you for self-introduction.
Sure. Hi guys. I'm Elong. We initially founded Mainnet Capital actually by 2017, and it's my pleasure. By that moment, we actually know Amanda. We explore certain areas like what Amanda mentions about blockchain, the new fintech areas. So actually, yeah, for my personal, I've been in the banking industry for quite a period of time, and before that, I've been traveling around with multiple countries and both in States and Germany, and for studying. So as both engineer and bankers, we actually see there's a huge opportunities and potential of the markets, the futures actually here. And the surprise is just like in Singapore, and because there's tons of opportunities, including investors are all flooded over here, especially for the past 3 years when the COVID pandemic started. So yeah, I'm very honored and very happy to join this panel. Hopefully we can give a very insight and good information and to share with all of you guys. Yeah.
Thank you, Elong. Thank you, Elong. Very happy to have you today. We have another speaker who is Didier Zheng. And very interestingly, I knew Didier in June 2018 when I was in Beijing to give a speech at a blockchain application seminar organized by Ethereum at that time. And so interestingly, you know, I knew that Elong and Didier actually knew each other in 2017. So yeah, Didier, over to you for a self-introduction.
Thanks a lot, Amanda, and very happy to know all you guys, and also have this great opportunity to participate in this panel discussion about the opportunities and also Chinese investor concerns on overseas countries, especially in Singapore, which I personally believe is a very great opportunity for Singapore. In fact, I just studied French literature in Beijing Foreign Studies University, and then got my first job for Chinese Foreign Affairs Ministry, and sent immediately to West Africa for 3 years, just 20 years ago. And then I just quit the ministry to further my studies of business management administration in France, and worked there for successfully BNP Paribas in mergers acquisitions, and also Stockchain for credit research for around 2 years. That is that after 5 years of stay in Paris, France, I got back just around 12 years ago to Shanghai, China, to work for a leading local Chinese broker, SWS Research, and to work as equity analyst covering Asian companies in mass mining space sector. And then I got recruited to by Forza International very famous Chinese conglomerate listed in Hong Kong with the ticker 656, and worked as head of investor relations. And also just got the market cap of Fortune International by around fivefold in just 3 years' time, and successfully raised a fund, equity funds, and convertible debt funding of around $3.5 billion for Fortune. And since 2017, I just entered into the crypto space, and also got into the veteran Web3 investor. And since July 2017, I successfully participated in the first round financing of Polkadot, some leading blockchain projects such as the Polkadot Filecoin, algorithms, etc., and got very great returns. As you guys might probably already know that if you guys just participate in the blockchain sector from that era, you would make very great returns too. And it's really such a good opportunity to Amanda in our panel discussion after 4 years, because last time I just encountered Amanda in the Ethereum developers conferences in Beijing, and so I'm really happy to join you guys. Up to you, Amanda.
Thank you, Didier. I think both of the speakers have very interesting background. Didier actually specialized in French language. I didn't know that. And Elong studied in Munich for his bachelor. I didn't know that also. Very interesting. Very happy to have both of you today, and really such a small world and such a coincidence that I didn't really know you knew each other since 2017. So it's really fated for three of us to sit together today, although virtually, hopefully one day physically. Now, according to some data from Singapore EDB, more than 80 of the world top 100 software and services companies have a presence in Singapore. And these include the likes of China tech giants Alibaba, Tencent, and ByteDance. China has the largest number of internet users in the world, but the rate of growth is slowing down, I believe. While Southeast Asia, on the other hand, has a relatively lower rate of internet penetration, and digitalization is still in the nascent stage, of course, with the exception of Singapore, which is, I think, around 70%. And many China tech companies feel that their technology and business models can be replicated in Southeast Asia. And Singapore seems to be favored by many Chinese investors, which will serve as their first destination for going global. So if you ask why Singapore, I think easy answers could be, like stable business climate, excellent internet infrastructure, market access to a population of 700 million people residing in ASEAN countries. And of course, the availability of technology talent in Singapore could be another plus. And further to the trend of China tech companies moving to ASEAN, as a natural result, we also see some strong trend for China TMC fund moving from Cayman, Hong Kong to Singapore, and family offices setting up in Singapore. So what are the internal and external factors pushing more and more Chinese investors and companies coming out of China and exploring ASEAN? And what are the real opportunities and risks and concerns, and probably some suggestions that Chinese investors may have in mind? Let our discussion begin. First question that I would like to throw to our two speakers today is that how do you see Chinese market growth bottleneck and or some regulatory restrictions which actually created such a great opportunity for China companies to explore overseas, in particular with involvement of blockchain and crypto since 2017? Maybe Elong, you want to go first?
Sure. For blockchain and crypto, it's a kind of very tricky questions about this, because since China has already been classified like mining, cryptos, all these kinds of exchanges is going to be not legal anymore. But we can find it's very interesting that both for Tencent and Alibaba, they actually have their own departments for blockchain. Would they embrace blockchain instead of crypto? One of the reasons is for the technology itself. For blockchain, it's revolutionary, can change the stuff. They can have a higher consensus for both like votings or DAOs, all these kind of things. But for crypto, they can it's more on currencies. And for the government side, what I can see it's crypto, if you treat it as a currency purely on financial sides, it can be easily manipulated by some illegal parties to get the hard-earned money from the citizens of any countries going to nowhere. So that's a dangerous part of it. So in the same time, for the implementations we can see from China, they have the Chinese RMB, and it's already being implemented. And in some city like Hangzhou, you can use Chinese RMB for taking buses. This is fabulous, because if we really implement blockchain in the currencies, which is kind of centralized currencies, but they actually help no matter financial institutions or governments to prevent anti-money laundering, those kind of anti-money launderings, all these kind of things can be prevented to protect attacks. And it's because for blockchain itself, everything is transparent. So the money, we won't have fake money anymore in a way, because everything is recorded in the system, in the network. And at the same time, for the publisher of the currency, we used to have the system for Chinese central bank publish the RMB, then distribute to all these kind of commercial banks for commercial use or business use, and for day-to-day, we deposit, withdraw, shopping, all these kind of things. So for all the commercial banks, actually we have the banking needs, but for central bank, they're holding the clearance. But for blockchain, the beauty part of it is they can have the business banking and the clearance to be together. The whole system can be embedded in one system. In one system. That's the beauty part of it. But for the chances over here in Singapore, it's for the past 2 years we actually experienced the STO, all this kind of thing, including SGX is spinned off with a security token exchange. But the volume is not there yet. But there's a trend, including our profession in the hedge fund and fund management business. We have BTC futures, all these kind of fund for trading, for CTA structures, or for closed-end fund. As all we know, globally for closed-end fund, there's hundreds of billions of markets. They have almost no liquidities. If you liquidate your closed-end fund, you have to pay for a high premium or have a pretty high discount rate, maybe 50% or 60% off of your holdings in order to liquidate out. But with the STO, they might enable provide liquidities for some good assets, and for some closed-end good assets, I can just I can sell to Amanda or Didier by blockchain ways, and all these kind of assets, they can be valued by the certified valuators, or they can be seen in Bloomberg terminals, all these kind of values. So this is what I can see. This is kind of futures of the movings in the capital markets, and there's some the crazy lovers for crypto. Crypto is going to change the whole world and going to bite the traditional. But my personal view is it's nothing about who wins the wars or something. It's always the topic that whatever technologies is going to make the whole system of life more efficient and just better world in that way. So in traditional, we can see IBM have the AS400 or these kind of things. It's very agent, like Swift is very agent, and all the banks still using it because the opportunity cost to change it is very, very high. If they change it, make any mistakes, it's going to be a super disaster for across all the banks. So this kind of decentralized opportunities to record it in the whole chain. They might improve the system to be more efficient. Like JP Morgan, they already implement this. They launched their own tokens and have their own private chains. And I do believe this is going to be more and more widely adopted. That's why you can see Ethereum price is shooting up, right? Since like 2017, the cheapest Ethereum price we experienced like $40 on 2019, 40 or $50 US. Now I think it's about 3,000, 4,000. It can be more, but there's no advice for investments, but we can see the trend of that. Yeah.
Thank you, Elong. Yeah, I think very clearly in China from 2017, the clearly government clamping down, in that year, and in 2018-19, I think there are similar policies pushing out. And last year, finally in September, I think the government made it very, very clear that that there is criminal liabilities involved.
Yep.
And even for the service provider in China that supporting the overseas crypto exchange, that they will suffer as well. And that's the reason why this last wave really pushing the last batch of crypto investors or those founders leaving China and landing in Singapore. And I think mining company also, including Bitmain. Didier, I understand that actually you also entered this line in 2017. And how was your experience at that time in China?
Well, I think your question is a very big issue. I will try to solve that problem maybe with a larger view. In fact, to me, I think the Web2 has economy. I mean the internet economy in the so-called Web2 economy versus Web3 representing crypto economy has already come to the end. In the sense that it has created too many monsters, too many monopolies, both in the West and East. And so during the past 10 years, we have seen tremendous efforts initiated by various governments, various countries' governments, to launch various antitrust cases against these monopolies, these monsters. Maybe in the United States, you will see antitrust cases brought against Facebook, Amazon, which has already failed. However, in China, you have seen successful antitrust efforts against Tencent, against Alibaba, against other internet conglomerates, internet monopolies, etc. I think it is a global trend that governments and people of various countries do not love too much monopoly by these Web2 monsters, these meager companies. However, we have seen different actions taken by different governments and also different outcomes. Which is a big contrast in the West and in the East. In the West, just to say, especially in those Anglo-Saxon countries, I think with better legal system compared to other countries like French-spoken countries, because I used to learn French literature and I used to have experience in comparing Anglo-Saxon countries and the French-spoken countries with the legal system. And a lot of empirical studies prove that really Anglo-Saxon legal system really benefits more minority investors than French-spoken countries, because the legal system is more transparent and protects more investors' interests. So capitalism in this regard, in this sense, really did a better job than other countries. So take the United States as an example. As we all know, Singapore also maybe follow suit for the example of the Anglo-Saxon system. So, I mean, this is a virtue. It is a great excellence point that Singapore could continue to attract capitals and also human resources. And we take the example of the antitrust cases brought by U.S. regulatory body, FTC, against Facebook and against Amazon. Both of them failed. and it is a due process. And we all know that U.S. governments and the U.S. people do not like the monopoly brought by Facebook, brought by Amazon, or other media companies. However, this is a very slow trend because they have to respect the due process. However, in China, there's a completely different landscape because just Chinese government just want to control all. I think the end is very good. Their objective is very good. It's beneficial for the goods, for the interest, the common interest of all people. However, there is no due process. So that's really harmed the interest of the investors and also arouses fears among investor communities. So that triggered really the outflow of capitalists and humans and also investors to abroad, especially to Singapore. And we will explain why Singapore will be the major destination of the Chinese investors and also Chinese enterprises. So, I mean, we see some different philosophy East and the West. In the East, especially in mainland China, we want to control everything. So the government just ordered that you shut down the industry. You shut down, for example, the education industry, and the industry just collapsed during just one night. And in the United States, maybe it takes years for such an industry to disappear, and it takes maybe dozens of years for mega companies to disappear. And so in the West, people mainly use blockchain technologies, decentralization technologies to break down this monopoly, to stimulate more competition, because the major problem that we have to stimulate the competition. We have to take down the profits, the monopoly of profits earned by the platform economies, because it's all platforms. However, in China, we don't love the monopoly of platform economies neither. However, we just take some administrative orders to break them down. And so it is a technological innovation in the West, that is blockchain. However, in China, it's very difficult for the government to make up their minds to develop at full speed the blockchain economy, because it's not like the internet economy, because Web2 economy brings just the freedom of flow of the information, but not freedom of flow of money, of financial flow. So for most of the countries with foreign exchange control, just like China, it's really very difficult for the governments to lessen the control over foreign exchange flows, or over money flows. So that's why China could fully embrace the Web2 economy rather than Web3 revolution. So that's why Chinese government don't like Web3 evolution. However, Chinese government also realized that it is really imperative for them to hurry up to get up with to keep up with the latest development trends of Web3 revolution. However, they just haven't yet found any solution out in resolving how to control the problem, how to control capital flows. That's the major problem. That is why China is lagging behind. So I mean, that's why all these Web2 companies in China just want to go out of China to chase other growth opportunities, even though these markets are more fragmented. In Southeast Asian countries, we see maybe around, I don't know how many, maybe around 600 million population. However, it's just fragmented. It's not a unified market, unified territory, just like in China. However, it's still better maybe than mainland China, because Chinese government now see the service industry other than manufacturing service industry, or we say just the live service, entertainment service industries, just not so good, not the primary objective of the next 10 years for the government to develop. And also, they probably just see these live service industry as some kind of an infrastructure and do not allow extra profits to be earned, to be squeezed out of this industry. That's why the growth just ceased to grow, and also investors just want to go out of China to chase for more profits, more margins, and especially in the Web3 economy. And while Singapore is embracing the Web3 economy with regulation, and more traditional investors will see this a welcoming sign. And we'll explain later on that indeed there are some Bitcoin crypto maximalists who do not like the recent move the Singaporean government to strengthen controls regulations over the sector. However, I'm somebody who likes to make compromise, and we see that Web3 economy is really thanks to the regulation that the mainstream money and mainstream investors started to accept this new economy, and which push the developments forward. And that's all for your question.
Thank you very much, Didier, for your insightful analysis. I think you analyzed certain very fundamental systematic reasons in China. In fact, in 2018 June, when I was in Beijing, apart from attending Ethereum's speech, the talk, I was invited to attend a China Law Society, a closed-door discussion with all the professors and legal professionals and some government officials to actually discuss, because at that time, China has already clamped down crypto. In Chinese, we call it 一刀切, meaning it's a very black and white, clear-cut clamping down, which in many professors, legal professors and legal professionals' view may not be very rational at that time. So at that time, I was actually sharing with them in the closed-door event to actually introduce to them Singapore's relatively open-minded position. So that, in fact, actually, some of the professors in Beijing, they admire, Singapore's policies, and they want to actually make recommendations to the Chinese government on that regard. And actually, I think in the same year, a few months later, Xi Jinping announced that, in China, I mean, although they clamped down the crypto, but for blockchain development, they fully support. And yeah. Okay, I think from international perspective, China tech company also see a rising need to separate their domestic business from their overseas business, and driven by the US-China trade tensions and the decoupling of the tech sectors of both countries. And there is a desire among them to build a more globalized image, and based on their exemplary corporate behavior. In Asia, we can see some ideal candidates for Chinese investors' consideration, such as Japan, South Korea, Singapore, of course, and Taiwan. So my next question to our speakers is that among Japan, South Korea, Taiwan, and Singapore, how do you assess them, or I would say how usually Chinese investors will assess them, and how usually they will favor which one the most? Elong, you go ahead first.
This is quite political, though. It's like
we leave the Taiwan the last.
Yeah, Taiwan definitely. Yeah, Taiwan is a good place. It's a very, very chill, relaxed. We have been there for several times and having holidays there. But anyways, for if we talk about this, we can just go for the statistics. And since like the year before, last year, Singapore started to do the VCC, and there's thousands of family offices started moving here. And there's if I'm not wrong, there have almost like 1,000 already being established, and there's more is queuing up. And by basic statistics, the minimum size of family office have to start from 5 million US, and for 13.0, and for 13 and another tier will be like the 50 million above. So just by this number, 1,000 multiplied by 5 mil or 50 mil, there's tens of billion or hundreds of billion, even more funds is moving over for family office purpose. The money just move here now and doing just like some basic investment, maybe like bonds, equities, VCs, all these kind of things. There's like hundreds of $billions flooded into Singapore from all around the places. Why? Why people are choosing Singapore? Then we don't have to argue about why Japan is better or Korea is better or Taiwan is better. For me personally, that's one of the reasons we moved here in Singapore. Is it's a Chinese society, and it's in the same time zone of China, and there's tons of like billionaires like love to move to States or move to Europe, and like there's old fashioned. I have to have a Swiss bank, living in like the bungalow in some of the mountains in Europe, US. Things have been for past like 30 years or 50 years. This kind of experience failed. One of the reasons is their business, their all these kind of business teams are based in China. If you want to have a meetings across the globe in different time zones, it's a disaster. Number one. Number two is eventually all these kind of bosses they will move back to China for business, and they will leave their kids and wives overseas in US. And after decades, normally will end up with divorce. This number one, and for the kids, they don't speak Chinese anymore. They forget about Chinese because Chinese language is kind of difficult compared to English. So, and the culture clash. And if you are in the Western countries, as a minority of Chinese, it's you can hardly blend into the same tier. To be honest, the no matter it's white or black or whatever. We don't want to talk about races over here, but that's the truth. We have to move to some Chinese societies, and for Japan, it's they listen to their big brothers, right, in the U.S. and for Korean as well. For Taiwan, it's a different topic. For Singapore, it's obviously they have a very good relationship with U.S. and China. They're taking benefit from both sides. I don't know how they manage to do this, but we can tell that all these kind of ships from U.S., no matter they are in Korean, Vietnam, or Myanmar side, when they want to do maintenance, they come back to Singapore, and that's how they have the establishment of the trust, and how the Singapore government actually can buy the latest and most edge tech of the weapons from US. They're willing to sell to Singapore. So you can treat it Singapore as a next generation of Switzerland in Asia. And why Switzerland becomes Switzerland? Because all the old rich, they are from UK, Germany, all these places, they just find neutral countries to deposit their funds, their wealth to be established over there. And Singapore is the trend. The new rich and all the money with China's emerging and become the second biggest economy around the world, and people have to find a place to establish their funds, especially when they liquidate their shares from no matter New York Exchange or Nasdaq or Hong Kong. They will move to somewhere safe, somewhere with good education, somewhere with premium lifestyles, and you can't find any place like this around the place or around the world. Maybe Europe, you can find some place, Luxembourg, Switzerland, but in Asia and this zone, you can't. Maybe Thailand, but infrastructure-wise and education-wise and safety-wise, you can't compete. That's why you can see from the property price and car price, all this kind of, even rental price in Singapore is hiking up for past 1 year, goes up like 20, 30, or 50%. That's crazy. So that's the trend is already there. We don't have to debate which one is better, but yeah, that's all thanks to the founding father of Singapore, Lee Kuan Yew, planned all this. Then they make the top university in Asia, 2 of them or 3 of them in Singapore, and they have different programs to impress the new talents from China. I'm benefit from this kind of programs. That's why I'm come here. So we have a lot of friends. They leave their country very, very young. And like me, I come to Singapore when I was 16, 17. So you treat this place as your home. When you establish, have your work, get married, have kids, that's your home already. That's your hometown. No matter what, like even you travel back to your real hometown where you were born, but the sense of belonging is equivalent. So yeah, that's how this whole thing was planned. That's really genius. It takes like for the past 30 years, 50 years to plan this out. And when the China is still in the very early stage, back to 30 years back or 40 years back, and Singapore have been already practiced this Chinese education to speak Huayu in China, in Singapore. So basically for our clients and all those family office, some of them can speak English, but most of them they can't, or they speak minimum. Anywhere in the world you want to survive and live a good premium lifestyle with pure Chinese, it's Singapore, no other places. You can't find any other developed countries you can purely speak Chinese. Japan you can't. Korean definitely not, and Taiwan is not a country. So yeah, that's my opinion.
Yeah, thank you, Elong. We can tell your strong preference here, and I know you are truly Singaporean now, although you were born in China, and you have two homes anyway in China and Singapore. Yeah, I think given today's political tensions, making big investment in Taiwan definitely may be difficult, and but I think what South Korea and Japan represents are probably the most advanced industry clusters, the cluster that are highly complementary to Chinese tech companies, and they are semiconductor, machinery, advanced material science, and specialty chemicals. And according to Bloomberg, I think South Korea especially harbors a near total agreement that R&D is essential to have a future. So, of course, Singapore's neutrality has no doubt, contributed to the outpouring of this investment money into this island nation. And Didier, so what is your view? Is it as similar as Elong, or you have something new to share?
Well, I must admit that Elong has already said pretty much what I wanted to say. So I just could add maybe some input from my side to support more what Elong has already said. I think the most important factor is certainly the language factor, because in China we get 1.4 billion population, and internet citizens, Chinese citizens, we account for around 1 billion or 1.1 billion population. However, for such a large amount of the internet citizens in China, we count only official data shows that we count only 10% of them having obtained a degree, a bachelor's degree or higher. So 60%, up to 60% of those Chinese netizens hold a degree something lower than high school. So 60% of the Chinese citizens never went to high school. This is spectacular to say that China is still a developing country, not a developed country. And when we talk about China, you always say China is in fact very fragmented too. It's something like European Union, however, with a very powerful central government. This is a little bit different from the European Union. However, if economically wise, we usually say we see rich China with only 200 million population, eventually mainly spread over the east and the south coast of China. It is the rich China. However, in maybe more continental China, we see another poorer China with maybe a population of over 1.2 billion people. And put another figure as an example. Premier Li Keqiang used to say, and I personally have checked that and proved he said what he said is true, that 600 million Chinese population in average and earns only this monthly disposable income of around I think 200 Singaporean yuan, Singaporean dollar, something like that. And also another figure, another data provided by CICC, a very famous Chinese elder research house, said that almost 900 million Chinese population earns an annual disposable income of less than 20,000 yuan. I think that is something around 4,000 Singaporean dollars for a whole year. So that is the poorest China. So if we say China is rich now, China is strong now, we are probably referring to the rich China with 200 million people. So that is to say, English is really a well capability among Chinese people. So that means if they just want to migrate to South Korea, to Japan, or Taiwan province of China, the problem is that we really don't speak the same language. Maybe Taiwan is better. It's much better. I love Taiwan a lot. However, also there's a problem of location. That is to say, to become a financial center in the world, you have to be a shipping center at first. If we take example of New York, London, and also Hong Kong, we see that they are all shipping centers, and their location is very good to receive all the ships, all the goods of the world. However, Taiwan and South Korea and Japan, I think it's not so well located as Singapore. Singapore's location is so important to become a shipping center all over the world, and especially for Asia. So that's why Singapore has the strength, all the factors to become a financial center in the future. And another issue is also what Elon has already said, the feeling of being at home. That's really Singapore is a Chinese society, and for all Chinese people, we all know the founding fathers. We are very familiar with the founding fathers, the names, and even their books of the founding fathers of Singapore. However, if you tell me to identify one of the famous politicians in South Korea and Japan, I really just simply can't. So Chinese people, Chinese investors are much more familiar with Singapore than with other countries. And also in Singapore, maybe I don't know whether it is appropriate to say that or not. However, if we define the Singaporean society according to pure Western standards, I don't say it is purely correct, but I just say according to Western standards, Singapore is something more like authoritarian society and more approaching the standards of China. So that's why traditional Chinese investors will think that Singapore is more similar to continental China. So if they migrate, naturalize to be a Singaporean citizen, they don't see any obstacles for them to recognize the value of the whole Singaporean society. And especially, Singapore acts as a bridge to bridge the gap between China and the United States, maintain at both excellent relationships with China and the United States. This is really, really very, very difficult. And however, South Korea, Japan, and Taiwan really is not that in such a love mode with China, just as Singapore already does. So that means I think Chinese wealthy investors will feel more comfortable in Singapore. I have some friends really have already become migrate to Singapore or want to be naturalized as Singaporean citizens. They just don't want to go to North America, to go to Canada or the United States. They just want to go to Singapore because they think that is a more familiar society. And if they get their children to receive education in Singapore, they are not very concerned that their children will be educated as some kind of a banana people that is too westernized. However, in Singapore, they receive more traditional education just as they received in mainland China. I think that is a very important point too.
Thank you, Didier. I think we all agree that the culture affinity takes a very, very important role for investors when they want to find a host country. And we can easily tell that the strong friendship between Singapore and China, even before as in when we were young, we were educated that way in China, actually. So let's move on to the next question. Now, Singapore is so small. It's a small market, but it serves as a channel and bridge to a much bigger market at other ASEAN countries with 700 million population. So what are the target ASEAN countries usually Chinese investors will be looking at? Not really traditional one, but under the new economy, like the tech companies, are they looking at Indonesia, Philippines, Vietnam, or Cambodia? Can you share your view, Elong?
Okay. Singapore is a very mini market, and actually people who come here to do business is not targeted Singapore citizens or locals over here. Majority will be like foreigners. Yeah, you can treat Singapore as a hub to not control, it's like influence the surroundings, including Indonesia is a very interesting market. They have like hundreds of million people over there, and but most of them are Muslims, and the benefit of that is they don't save, they spend all of them. So you can see the emerge of the Shopee over here, and for different platforms, e-commerce, they are emerging, but not 100% depends on Singapore markets. For Indonesian markets, personally, I find it's quite interesting. But we should not just limit to ASEAN area. Now we are based on digital economies, and with the emerging for those kind of digital banks, which Singapore just like released multiple license to like for big players. I do believe there's more and more players is going to join in, and as the like global centers, a global hub over here in Singapore, and they can have multiple branches across the globe, and most of the people like the Chinese investors or enterprise, even they come to Singapore, and they can be a big investors or customers. They can still from China or from Hong Kong, from all around the places. They are not just limited to ASEAN. And there's a better one is from Singapore you connect to Europe and US. And US and Europe, they have a strong trust in Singapore, and they speak the same language as well. And then this is a super good bridge between the East and West. Because for China, since China is emerging unstoppable, and for the US and Europe, they definitely want to stop it in a way. Otherwise, they're leading in both technologies or financials. But since this is unstoppable, and they're going to be they forever have two competitors, and like a Chinese old Yijing. Once you have a harmony of two, you always have balances too. We used to have only US after the Russian break apart. Then US is the biggest and have been leading. They can do whatever they want. Now the Chinese emerging, they can not fight against each other, but they can balance out, and they can balance out the markets. Then Singapore is a just perfect bridge to break them up and to have the either tradings or communications, including previously they have conferences for maybe sensitive topics, maybe from mainland China and Taiwan, or maybe North Korea or somewhere they want to have a talk. They both don't want to go to their own countries. They will pick a neutral countries in Asia, and Singapore is the ideal place to choose. So Singapore is you can treat it as an agent or just a prime brokers or something, hosting all of this from the traffic, the benefits. This is normally the business model from the bank. Bankers normally do this. They move around the products. Then what left over, it's whatever they have on hand. So clean hands, but they benefit both. For agents, the beauty part is they want the best for both parties. They don't have conflict of interest for both. I wish you the best, then I can benefit from this. So that's purely commercial, purely for business. There's no politics and all. So Singapore have this kind of stance for the global views. And meanwhile, for Singapore government is quite efficient and clean. So it's very favorable for SMEs, for startups, and you can, as a local citizens or PRs, actually you can start up your own company just by, if now we start to register the company through website, you can have your company registered in next 40 minutes and open your bank accounts. If provided you are local citizens, then you can open your bank account through websites in another half an hour. So you can have your account set up with your complaint, secretary, everything in place in 2 hours. I don't believe you can achieve this kind of efficiency anywhere in the world. So yeah, I'm very happy about this.
Yeah, thank you, Elong. Thank you very much. Because we are running a bit late. Lydia, you want to share a bit more on this regard about using Singapore as a hub and then venturing into the Southeast Asia countries, and which countries or which market do you think the Chinese investors favor more?
Okay, I will try to keep it. I will try to keep my answer.
Be short. Yes, thank you.
Okay. Yeah, I totally agree with what Elon has already said, that the people are moving to Singapore, not just targeting Singaporean markets because it's a tiny market. However, people are talking maybe the words. A long time ago, we are saying copy to China. However, today, Chinese people have already the capability of copy from China. However, the problem that is due to the U.S.-China trade tensions and maybe more tensions in the years to come. However, if Chinese companies or just like the BAT or something else just move to Singapore to set up a subsidiary or just become a Singaporean incorporated company, just like what Sea and Shein has already done, moved their headquarters to Singapore to become a pure Singaporean company. They just really could just occupy the market of the whole world. So we are seeing that the Shein has already become very popular in the United States among U.S. youth people, and Sea is already doing very well in Brazil, even to the extent of defeating the Brazilian local competitor Meili. So I'm saying that more and more companies will follow suit, and will follow the example of the Sea and Shein, and maybe to become a pure Singaporean company in the future. And that's the destination. And also, talking about ASEAN markets, I think because I'm more focusing recently in the GameFi sector, such as to say blockchain game, and we say that during the mobile gaming era, Chinese game industry has already defeated all the West companies and Vietnam companies, etc. So I have the problem that Chinese companies simply can't do GameFi sector in China because the government just forbid them to do that. However, if someone just set up a Singapore company, a Singaporean studio or project to do that, I don't see any evidence why Chinese projects in Singapore or Singaporean projects can beat those Western or ASEAN competitors. And for the GameFi sector, I see the main market nowadays as Philippines, Indonesia, Vietnam, and Brazil, something like that. So, I mean, if someone wants to create a subsidiary in Singapore or even become a pure Singaporean company, I think the major markets, the primary market, of course, would be ASEAN and then Latin America, especially Brazil and Argentina. And maybe they could just also occupy other more developed markets such as the United States and Europe. We see Free Fire of C has also done pretty well in the United States too. So, I mean, in Singapore, you have to have some kind of a broker's mindset. Singapore is more like a broker country. So you assemble all the resources necessary to occupy the market of the world. You earn the money and you assemble the people, labor force, capital, technology, etc. However, don't rely too much on what Singapore has locally. However, just try to group all the resources necessary and to contribute to the development of Singaporean society. And that's what I think about the future of Singapore. Thanks.
Thank you very much, Didier. I think we are really running out of time. To just summarize our discussion today, what Chinese tech investors are looking for in the host country are mainly all this a stable business climate, situated in an advanced industry cluster, access to international markets, and ease of cultural assimilation. And apparently Singapore has all. And I think we really need to have more people like Elong and Didier to help Singapore and ASEAN to bring more Chinese tech companies and investors to come to Singapore and ASEAN. I'm sorry that we don't have time for speakers to have closing mark. Thank you very much, Elong and Didier, for the insightful discussion. We shall catch up physically very soon. And thank you, everyone, for spending time with us. We hope you all enjoy our panel discussion today. And if you have any questions, please feel free to reach out to us. Enjoy the rest of the event today. Bye-bye.
Thank you, Amanda,
Bye-bye.
Elon, and Didier, for sharing on the evolving investment climate in Asia from the investor's vantage point.